Hey everyone, my name is Jack. Welcome to the channel. I cover a variety of topics as they relate to investing, real estate, the financial markets, and all of that sort of stuff. So if you like that sort of content, be sure to take a look around the channel, and if you like what you see, definitely subscribe. But in today's video, I want to talk about a rather ridiculous story that's coming out of the Hertz bankruptcy right now. In short, Hertz is trying to fleece investors out of $1 billion because of how inflated its share price currently is. But how on earth did we get here? Well, before I get into that, be sure to leave a like if you like this sort of content so I know to make more of it, and so YouTube can show this to other people who like this sort of content. It will go a long way towards helping my channel grow. Maybe not as quickly as Hertz's stock price in the last couple days, but hopefully it'll help my channel grow quickly nonetheless. For those of you who don't know, Hertz is a large rental car business that, heading into the crisis, was in the business of renting cars. But since the crisis hit, car rental demand drastically reduced because no one was traveling, and typically the only people who use rental cars are those who travel into different cities. But not only because of travel bans, but also because of fears with the virus, we saw a massive drop-off in car rentals throughout the country, in addition to travel in general. This really hurt Hertz. This really hurt Hertz. Hertz did not like this because they are extremely leveraged and can't afford to take many months without having all of this income coming in from the rental car business. In fact, heading into 2020, when Hertz's share price was just shy of $20, it was 90% leveraged. That is, 90% of its capital pool was from debt. In other words, Hertz was in a very vulnerable position if their share price were to ever drop, because then they would struggle to raise enough capital to maintain operations and really to maintain the debt service that they have. So they would have been in a really hard place. Well, sure enough, that's exactly what happened. Hertz's share price dropped from about its $20 high this year all the way down to about $5, and it went sideways from there just at the end of February. And it bounced around between $4 to $6 all the way until May 22nd or so, when the share price was about $3. During this whole time, people were expecting Hertz to file bankruptcy because of how leveraged it was, and clearly it had no revenue, and it didn't have any revenue or cash to pay for that debt, and it certainly couldn't raise enough cash by selling shares of stock because of how destroyed their share price was. So Hertz finally did the inevitable on May 22nd and filed for bankruptcy officially. And when it did that, its share price plummeted from about $3 all the way down to 50 cents or so per share. And that frankly was to be expected. The company's completely insolvent. The only people who really have shares left would have been the company and maybe board members who were trying to hold out as long as possible, or maybe wanted to see if there'd be any slight jump in the share price before they finally liquidated. Carl Icahn was a major investor in Hertz, and he sold his shares at under $1 because of this same reason. But what happened next really does not make sense on anything other than rampant speculation by investors. Hertz's share price has skyrocketed from its 50-cent low from just a few weeks ago all the way up to $6 at its recent high, and is now hovering at about $3 per share as of the filming of this video. The thing is, nothing changed. Hertz is still completely insolvent, has way too much debt, and not nearly enough equity to potentially sell off and pay off this debt. So any shareholder that buys a stock right now and sits through the bankruptcy is not going to get anything in all likelihood. This is the risk you take when you buy a stock. When you buy a stock, you are second in line when it comes to bankruptcy behind bondholders. Bondholders, or anyone who holds the debt of the company, will get paid first. So anyone who holds all that debt that Hertz has, they're the ones getting paid first. So when Hertz sells all of its assets or reorganizes things, that is who's getting paid. And it's paid out of the equity pool, the assets that the company has. And that's the risk you take when you invest in stocks rather than debt products like bonds. You are second in line. You are not a priority when it comes to bankruptcy or when a company goes insolvent, which does happen, as Hertz is a glowing example. But Hertz is still insolvent. So why on earth has the stock price shot up multiple times over just in a matter of weeks? There are only a couple reasons I could possibly explain this. One of them is definitely not that the stockholder will get paid by the time the bankruptcy rolls around. That's pretty much out of the question. So the only other reasons that would be left would be Fed printing and inflation-driven rises, which could factor in for some of this gain, or more likely, rampant speculation. Not on anything fundamentally with Hertz as a company, because it's going away, or at least it's reorganizing, and any shareholders right now are going to be wiped out. But really just speculation that it's going to keep rising because more people are going to keep buying it in the short term for whatever reason. It's an almost a positive feedback loop of speculators right now. That can really be the only thing that could explain it, other than just pure stupidity. Because if it wasn't stupid, then why on earth would Carl Icahn have cashed out at under $1 right after the bankruptcy announcement? Why wouldn't he have sold out now? Why wouldn't he have held it because he saw that this was going to happen, that it was going to go up? Because Hertz is fundamentally a better company than it was 2 weeks ago. Obviously, that is not the case. This is rampant speculation and nothing more. There's just no other reasonable explanation that could explain this rise. Now, the interesting part is Hertz sees this giant equity pool that's grown out of nothing after the bankruptcy announcement, because they thought their stock was near worthless at 50 cents, but now it's multiplied many times over, and all of a sudden they can raise some money if they sell some shares right now. They probably didn't think that was going to be an option ever again, at least until they're done with this bankruptcy. Now I want to take a moment to explain what happens when a company files bankruptcy and what happens to their assets specifically. Their assets are put into what's called the bankruptcy estate. And the estate sort of puts a wall around all of these assets and dictates what the company can or can't do with those assets in order to preserve them for the debt holders, or the bond holders in this case, to make sure that they get paid out of this pool of assets. So Hertz can't just go unilaterally take their shares and sell them right now. They have to get approval through the estate, through the court system, the bankruptcy court system of the United States. The reason you have this sort of limitation is so Hertz doesn't just sell off everything, take the cash, run away with it, and not pay any debtors off because they took all the assets away and they're now out of the estate. The estate puts a wall around those assets to protect them so that creditors can actually get them by the time we get through the whole bankruptcy process, which can take quite a long time for some more complicated firms that have a lot of assets to sort through, like Hertz, which has a ton of cars to sell, for example. But now Hertz is asking the bankruptcy court for an emergency ruling that would allow it to sell an additional $1 billion worth of shares in an effort to raise cash to then pay off debtors. Why would Hertz want to do this? Well, they obviously don't think their stock is worth this current price, and it certainly isn't going to last in their view. So they're trying to sell ASAP to take as much money from stupid investors, or speculative investors at least, who are trying to make a quick buck on nothing other than emotion right now, and are trying to take that money to use it to pay for part of their bankruptcy debts. When a company in bankruptcy thinks that its shares are overvalued and looks to quickly sell them before they're no longer overvalued, you know you have a very strange situation in the market. And this, just like so many other things in this current market, is another unprecedented event that really shouldn't be happening at all, but it is. So what can we learn from this very strange situation? First off, you should always understand what it is you're investing in. I'm sure that a lot of people who are investing in Hertz just look at the stock chart, see that it was worth $20 a few months ago, don't even realize that it's in bankruptcy perhaps, or think that they'll just be able to come out of it no problem, and see that the stock is only worth $3 right now, and they're like, well, why can't it go back up to $20? Isn't Hertz worth $20? Maybe it was back in February, but it certainly isn't now. And probably stock right now is close to worthless in Hertz's own view. They don't think that this stock is going to be worth anything. That's why they're trying to dump it as fast as possible while the price is artificially high. And when you're investing, don't pretend like speculation is a viable long-term strategy or even a short-term strategy that's worth anything. The risk is just so high with something like this. You know the company is in bankruptcy and you're just speculating on short-term price growth, which may or may not happen, and that is your entire investment strategy. That is so risky, and if you're putting any significant money there, that is a lot of risk you're taking for really little upside at the moment because Hertz is trying to dump shares. Now, I'm not a financial advisor. I've made that very clear many times before on this channel, but please just be very careful when you're actually investing in anything in the stock market or really in anything in general. And if you're thinking about buying Hertz stock right now because you think it's cheap, well, yeah, it is cheap. But that's because it's in bankruptcy right now. Hertz is not going to be the same company once it comes out of bankruptcy, and certainly any shareholders are going to be wiped out because there's so much debt on the plate right now for Hertz that they are not going to have anything left over by the time they get through bankruptcy for any shareholders that are left. Someone's going to be left to foot the bill for shareholders, and I hope that it's not you if you're thinking about putting a bunch of money in Hertz because you think stocks only go up. Well, the fact of the matter is, stocks don't always go up. It's very sad. I wish it was true. I'm sure everyone wishes it was true. The Fed certainly wishes it was true, but unfortunately that is not always the case. Well, anyways, that's all I've got for today. If you like this video, please like it as it helps the channel out a lot. What's your take on this very bizarre situation? I'd love to see it in the comments below, and be sure to subscribe to the channel so you don't miss any of my new updates. I put out new videos every single week about a variety of topics as they relate to personal finance, investing, and that sort of stuff. So be sure to subscribe so you don't miss any of that. Check out my links in the description if you want to go ahead and take a look at Hertz's stock price. You can use one of the free brokerages that I have down in the description. You can get some free stocks as well by signing up for Webull and Robinhood. And if you do end up signing up and putting a little bit of money in the accounts, you'll get those free stocks. You can actually sell them off right away and then use them to hopefully not buy Hertz stock right now unless you want to speculate that it's going to rise very quickly in the short term, as so many investors apparently have. But until next time, take care.